Thanks for clicking! Toronto's real estate market probably won't see a recovery until a trade deal is reached with the United States or the Prime Minister pulls us out of this. This according to the Chief Information Officer at TREB, Jason Mercer.
I think there's still a degree of uncertainty out there, but I think if we start to see things solidify, whether we're talking about our trade relationships south of the border or some of these big infrastructure projects in Canada, getting off the ground and people can see the light at the end of the tunnel, then maybe we see more confidence.
That's about as good as I think we've seen from TREB.
There's treachery in that office.
And yeah, that is a rare acknowledgement from the real estate industry that geopolitics matters at a time of heightened uncertainty coming out of the United States. As such, I think this acknowledgement and recent events provides us a good segue to look at what current uncertainties mean for both Toronto's and Canada's housing markets. So what I want to do today is very briefly go over Toronto's housing data for the month of December, take a look at recent comments on Canada-US relations, go over the events of last week and the potential impacts on Canada's housing market, and then discuss some implications. I am going to do a little bit of international relations theory today, just a little bit, as I think it's becoming increasingly clear that Canada's economic context cannot be analyzed without going over geopolitics. Even the realtors are starting to admit it.
I'm proud of you, you know that. I hope you do.
Thankfully, we do a fair bit of that on this channel. Make sure you click like and subscribe if you want to get further updates. But for now, let's get into this data. On to the data. I am going to go over this data much quicker than usual, as I do want to move on to the US stuff, which currently I think tells us much more about where Toronto's market and Canada's market is heading. So the benchmark price in Toronto was down 10K last month, down 120K since last year. The average price down 32 since last month, 60K since last year, and the median price was down 25,000, down a total of 80,000 since last December. Definitely not a great December for Toronto's housing market, even worse when we take a look at the sales data. Sales were down 9% since this time last year, new listings were up 2%, and the total amount of inventory available was up 20% since the year prior. So yeah, a very dismal December in Toronto's housing market. Even the headlines had to admit it, coming off much less anti-home buyer than that which we've been usually accustomed. Though, with that said, the majority of the headlines did seem to focus on letting us know that although 2025 was bad, a recovery in 2026 was still possible. Yeah, no coordination at all between the real estate industry and all of these media outlets.
The importance of free and independent media.
Regardless though, that recovery, as even TREB admits, is contingent upon a reaffirmation of trade relations, meaning a deal with the United States, or the Prime Minister pulling us out of the fire. This acknowledgement of geopolitics echoes a report coming from Even Rural LePage from last month, which acknowledged that economic uncertainty was keeping homebuyers out of the market. Which, I mean, as even the Toronto Star pointed out, these are unheard of types of projections coming from brokerages that usually want to boost sales. The point being, if the real estate industry is telling us this isn't good, this probably really isn't good. Even Jason Mercer, the same Jason Mercer who only a year ago told us that trade disruptions would only temporarily move buyers to the sidelines, is noting that buyers probably aren't coming back until this uncertainty dissipates.
There's still some uncertainty, so I think there's a lot of households that are just sort of waiting to see what their economic fortunes look like, what their job situation looks like as we move through 2026.
Which, yeah, welcome to 2025. And obviously, after the events of last week, that's going to be a tall order, as we've seen headline after headline noting the warning that these events pose for the Canadian economy. And on this, I want to get into a quick bit of IR theory. Recall last February, I had made the point that the full tariff threats probably weren't going to materialize, as the new administration was engaged in a type of realpolitik, seeking and demonstrating power as a means of gaining more. So it's not enough just to seek power, it's not enough just to maintain power, you also have to show others that you're willing to use power. And yeah, the reason why the demonstration of power is so important very quickly is that because the international system is anarchic, in that there's no state above the state, there's no 9/11 operator to call when things go wrong, countries pursue power as their number one priority. And this isn't a new idea by any means, it's a form of realist thought that goes back to Thucydides back in 476 BC, then to Thomas Hobbes in the 17th century, all the way up to Hans Morgenthau in the mid-20th century, then all the way up to John Mearsheimer as of recent. The point being, states have to be self-reliant, and as a result, their first priority is always power.
Sometimes you gotta just take care of yourself, you know?
So that's the theory part. Here's the evidence. Venezuela was nothing new. The United States has orchestrated regime change ad nauseum for at least the past century. Mossadegh in 53, Pinochet in 73, Iraq, Libya, etc., etc. Iran and Chile were both quasi-democracies when they were overthrown by the United States in 53 and 73 respectively. If you want further history, consult 1991's JFK and Donald Sutherland in this scene. It's a decent go-over, minus all the conspiracy stuff. For really good conspiracy stuff, I like this book. The point is, these types of regime changes, these types of interventions on the part of the United States happen all the time. This wasn't anything new. This wasn't a breakdown of the international order. It doesn't mean that Canada's next. And it certainly doesn't mean that oil's going to zero tomorrow, along with interest rates from the Bank of Canada, and then we all get rich as real estate goes to the moon.
Don't say I didn't warn you.
But what is new is the rhetoric.
We're going to get the oil flowing. They stole our oil. In other words, we'll be selling oil, large amounts of oil.
In general, that's not how the U.S. usually communicates. Jon Stewart actually did a good bit about this, noting how when the U.S. initiates regime change, they usually mask it with something more ideal, democracy, promotion, etc. And it's this rhetoric that I think is going to get us into trouble, especially as we head closer and closer to Kuzma negotiations. I've made the point in a few previous videos that these negotiations, especially dealing with this president, are not going to go quietly.
He's not going to negotiate quietly. Expect to be on Twitter, on True Social.
And yeah, with the president now coming fresh off a win and crowing about U.S. power, I think Canadians can expect to see more of the same as these negotiations unfold. I wouldn't be surprised to see the president tweet, or truth, whatever it is, that the U.S. doesn't need Canadian oil. They have all the Venezuelan oil that they need. And I think just the rhetoric, even if the policies don't change all that much, will be enough to keep Canadians out of the market, to augment enough uncertainty on the part of potential homebuyers to keep them from pulling that trigger.
You need to stop.
Now, obviously, there are other pre-Trump reasons why the real estate market may not have taken off in 2026. But I think the consistent blustering coming out of the president, again, more bellicose than that which we've become mostly accustomed, having now demonstrated to the unaccustomed observer that he's willing to act, is only going to add to the uncertainty of Canadians. Now, a few important points to end off. First, this realist theory that we discussed earlier does not posit that countries can do whatever they want without consequence. Indeed, there will be a reaction, which I think we're already starting to see. Second, it also assumes rational actors. So, well, if you've read any of Woodward's books on Trump's first term and on the interim between the first and the second term, you'll know that's not always the case.
This was one of the most stunning.
Third, finally, and most important, although we touched on international relations today, that's not really the focus of this video. The real focus is to add on to what TREB and the realtors are now starting to realize. That although yes, the market probably isn't returning until uncertainty dissipates, although I think that's a necessary but not sufficient condition, that could in fact be a very, very long way off. Jason Mercer says the second half of 2026.
We see more confidence and more movement into the market in the second half of this year.
We'll see what happens. Again, the U.S. isn't acting overly un-U.S., but the rhetoric coming out of the United States is very much abnormal. And abnormality very much makes people uncertain.
I can attest to that.
So, the Toronto real estate market in December, abysmal to say the least, probably not looking much better given current geopolitical uncertainties. As with always, as we've said so much on this channel, and especially now, if you want to understand the Canadian market, we need to be aware of what's happening in the United States and beyond, which we will obviously continue to track on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.